Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is January 17th, 2011. Today is Monday, Martin Luther King Jr. Day, and here in the U.S., both stock market and bond markets are closed. But as you can see, the Forex market is open for business, and this really highlights the international flair to the Forex market, and that, how it really is an international market, and how you can use it to invest in different regions around the globe if you're concerned about your own home country's economic prospects or their currency for that matter. So today Forex is open, all right, and what we're looking at today is I'm looking at a chart here of the euro. All right, now there's a meeting going on in Brussels today with all of the euro heads. There's not a lot of news going on out there today, but the finance ministers and central bank types are all meeting in Brussels today to discuss how to further deal with the European debt crisis. And at this point, it doesn't look like anything concrete is going to come out of it, as the market's reflecting in their opinion as well. You can see euros lower across the board. All right, just looking at the 30-minute chart here, euros pulled back a little bit versus dollar. All right, and it looks like we had a little bit of near-term support here, about 133.40. That could be potential short-term resistance. So we may get a pullback here to 132.5. Before the day is out. But this may be a case of the euro just maybe moved too far too fast, and the hawkish comments from the ECB and Trichet last week may have caused a massive short squeeze that the euro is not quite ready to support at this point. So that's what's going on with the euro. Just want to look at the pound real quick. Pound is higher. All right, they've got their CPI data coming out tomorrow, and it's expected to show an increase of 3.4%, which is outside the government band. Now, if it should come in any higher than that, the market's going to, be wondering what's the BV is going to do at this point, because so far they've been outside the band for a while now. They've had to keep writing the letters to the exchequers explaining why inflation's so high, sort of like an embarrassment sort of thing, I guess. But right now, the economy is still pretty fragile there, and their PV is still trying to grapple with how to encourage growth in the economy while at the same time keeping inflation tame. So we're going to have to see what they decide to do about that. So the CPI data in the UK is going to be pretty important, but so you can see markets pushing it higher as well, and we're coming back up towards we just look here on the 2-hour chart, back up towards the 160 level, which is a little bit of psychological resistance there on the pound. Lastly, just want to show you, let's just look at Aussie versus Kiwi. On the 2-hour chart, as you can see here, we identified this one last week. The Aussie's been weakening versus the Kiwi. That has to do with the flooding that they're seeing over there in Australia. Money flows are making their way from Australia to New Zealand, all right, as the market's uncertain what the impact of the flooding is going to be in Australia. Okay, on the one hand, it's going to hinder economic activity, but on the other hand, it's going to encourage growth going forward as they have to repair all these things. So the question is what that's going to do about inflation, if this new increase in demand to repair things is going to push prices higher, or if the economic slowdown as a result of this is going to actually keep inflation tame. So we're going to keep an eye on the Aussie. Let's just look at the dollar versus loonie here. Okay, we can see now we're retesting, getting close to 98.5 lows. Now tomorrow, the Bank of Canada has got their rate policy meeting, and while they're not expected to do anything about rates, the market's going to be on the lookout for hawkish comments out of Bank of Canada Governor Carney. Now, in Canada, they actually increased the mortgage lending rate today to try and rein in consumer spending a little bit, to try and halt the pace of inflation. So right now, the market is pricing in about 3/4 of a basis point. About 75 basis points, I should say, rather, 0.75%, 75 basis points of an increase to potentially take place here in 2011. So we're going to watch Canada tomorrow. We got British CPI data going on, and that's what we're looking at here today. So without anything happening here in the U.S., no one's going to say anything dumb that's going to potentially move the markets. We just had China in town last week, who basically told us to mind our own business, respect China's sovereignty, and to quit harping about the rise in the value of the Chinese currency. So that hasn't done anything as of yet. So that's what we're looking at here today, folks. Volume's going to be light in the U.S. session, as I mentioned. Banks stocks are closed today, but we could get some volatility, which if you're a trader, that's a good thing because we know volatility is our friend. So that's what I've got for today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.